that Neeraj did touch upon the JP Morgan note and the way they're looking at Nifty 50 in terms of the next 6 to 9 months and their strategy with regards to India. Soumeet has the granular details of the note as well. Soumeet, over to you.
Well, yes, the JP Morgan has come out with this big India strategy report where they're saying the first quarter of FY26 earning will lay the foundation for the earnings rebound. Now, they're anticipating that this quarter will serve as a transition from underwhelming earnings that we have been seeing for the last 3 quarters to a decent recovery now going forward. Now, this will be driven on the back of low base from the previous year and a resurgence in the economic activity. Now, they are pointing out few factors that are led to this recovery in the economic activity. Firstly, they're saying that there's an ongoing recovery in the rural demand followed by reduced tax which will come effect from end of April, and this could also boost the demand going forward. They're also expecting the easing of monetary policy regime to boost demand. Apart from this, it's declining inflation, the above normal monsoon, and given the fact that the commodity prices have also softened, could also push the earnings for India Inc. From first quarter of FY26. Now, they're expecting Nifty to trade anywhere between 26,500, that is their base case, while the bull case stands at around 30,000, that is the Nifty level that they have given for the next 6 to 9 months. So a clear target that has been given by JP Morgan at this front. Now, when it comes to earnings for first quarter, they're expecting Nifty 50 aggregate earnings to grow anywhere between 4%, that is the revenue. EBITDA and PAT are expected to grow 7%. So clear margin growth, margin expansion is expected on a YY basis because the EBITDA and PAT growth is much more than what the revenue growth is here. Now, which are the sectors that will drive the earnings growth? They're expecting earnings will be driven by healthcare, which is pharma, insurance, building material, which includes cement, paints, and they're also expecting capital goods to lead the earnings growth in the first quarter. While on the flip side, it will be dragged by autos, defense, consumer staples, and gas utilities. And they're also expecting the earnings to be muted for a couple of sectors, that is IT and banks. And this is not very frequently we see that both these sectors, that is IT and bank, together report a muted set of numbers. And when it comes to preferred sectors, they have listed out banks, consumers, hospital, real estate, defense and power. These are the preferred sectors for JP Morgan, and the target that they have given for Nifty for the next 6 to 9 months is 26,500 on the base side, and the bull case is 30,000.
30,000 on the Nifty 50 on a bull case. Thanks so much, Soumeet, for laying that out for us.